Are you interested in passively investing in real estate syndications? It's really an amazing way to generate passive income and create generational wealth. You might be wondering, my gosh, how do I know which markets I should invest in? That's what we're going to talk about in this video here. So as you're evaluating the different kind of opportunities, perhaps, how do you know if it's a good market? And we're going to talk about that here in this video, so stay tuned. My name is Michael Blanc, and I help people become financially free with real estate. So you may be interested in alternative investments, specifically real estate. You know it's a wonderful place to invest in. And maybe you're starting to look at some deals coming across your desk, and you're like, that's pretty cool, but how do I know if this is the market I want to invest in? And that's what we're going to talk about here, because it's important to know that, because you want to invest in a market that's growing. If you're investing in a deal where the market is flat, or worse, it goes down, it's going to be hard for the operator to make the business plan work, because they're going to be struggling with the property itself, doing a value add deal on that. That's hard enough. And now they have to fight the market as well. And so it's important to know the difference between a good market and a not so good market. And I didn't really understand this until I invested in different markets early on in our career. We invested in a variety of different markets, and you could tell the difference. For example, we invested in Birmingham, right? And Birmingham was just a really low growth market. And that deal was just a slog, right? The rents really couldn't go, the rents wouldn't go up. There was a high rate of delinquency. And it's just a struggle, right? We had another one in Little Rock. It was a growing market, a relatively good market, but we couldn't find there was a poor labor pool in there. We really struggled from a management perspective to find good managers and contractors and things of that nature. And so on the other hand, we invested in Huntsville, and everybody is moving to Huntsville to start 6-7 years ago. And that property is outperformed because that rising tide lifts all boats. And Huntsville was a perfect example of that. Also in Atlanta, a lot of people are moving to the Southeast, so the rents continued going up steadily, and it just made everything a lot easier. So you want to invest in markets that are naturally growing. So what to look for? You want to look for a high growth market, so a market that's growing in population, incomes are going up, home values are going up, that kind of stuff. And of course, you're looking for markets where you can get yield, and you'll get that through the market, through the package, the investing package. You'll see what the cash on cash return is, or the interest rate, not the interest rate, the interest rate and IRR, things of that nature. So you get to see that, but you also want to make sure it's in a growing market. One way you can look at it is there's several different websites you can use to research a market. So one is population. You can go to census.gov and kind of look at this particular MSA, the cities, and look at their data tables and see what they're projecting to be population growth to be. Job growth, you can go to the Bureau of Labor Statistics, that's bls.gov, and you look at job growth projections, income growth projections. So you're looking at the estimated median household income. City Data is the place for that, city-data.com. All these things should be down in the notes beneath there as well. And then house value growth, also City Data. So are the properties going up? Crime trends, citydata.com. 3 of those is a good one for that. Rent growth, what are the rent growth projections, historical projections? Apartmentlist.com. And those are some ways you can find out where some of the higher growth markets are as well. So when you get a deal you come across, maybe just go in those and see. You want those to be above the national average, right? If it's at or below, you're like, that's not helpful, right? I like to be in markets that are actually growing. And so this is the way to do it. And it is a lot of work. One of the ways that you can really mitigate your risk in investing in syndication real estate is to pick your partner. Pick your operating partner well, because an operating partner that's got track record and experience, right? They're going to do a good job for you across the board. They're going to pick the right market for you. They're going to pick the right property and the right submarket for you as well. They're going to manage that property better. So definitely be educated, ask questions, conduct market analysis, but at the end of the day, really find the right operator, because it solves so many problems. It's who, not how, right? Even though you should ask questions, and maybe you should be able to dig into market analysis, the how is much less important than the who. Find the right who. We'd love to be your trusted source as an operator of multifamily properties. We've been doing this for a long time. My 2 partners and I, we have nearly 2,000 units. We've exited 5 or 6 of those over the years as well. We have a lot of experience. We've looked at a lot of deals. We've passed on a lot of deals. And we just feel like our superpower is operating multifamily property. So we'd love to build a relationship with you and earn your trust. The best way to do that is a link down below. You can schedule a call. Go to nighthawkequity.com, check out the link below, and just schedule a call with us. We'd love to have a conversation, get to know each other, and present you with some upcoming opportunities.